Get ready to be taxed on your sun use. Yes, your sun use. Next on the Energy News Beat Stand Up.
Germany's net zero plans, including taxing the sun and closing stable power plants. You can't buy this kind of wild fun. In a bizarre twist of environmental policy, Germany's push to net zero emissions is involved into what critics are calling tax on the sun. This comes amid the country's aggressive shutdown of reliable energy, including nuclear and now coal plants under the banner of green energy. Michael, you can't buy this kind of stupid. I embedded in this article a X post, and this lady is just absolutely beside herself with the amount of money that was thrown at people to put solar panels on their roofs. Now they want to tax you for having them on your roof, and it's called the sun tax. And now you're sitting there looking at why is China has increased electricity production by 70%, while production in Germany has declined by 10%. Net zero equals deindustrialization, financial collapse is what that actually equals. You cannot buy this.
We're going to tax the sun.
Unbelievable, dude. And the UK, the next story doubles down. You ready for this one?
Yeah,
let's go to the next story. UK doubles down on net zero, restricting North Sea oil production. Michael, this is their last hope for any kind of problem going on here, and a bold yet controversial move. I call it stupid. The UK, under Prime Minister Keir Starmer, is intensifying its commitment to net zero emissions by clamping down on North Sea oil production through a combined elevated taxes, stringent environmental regulations, and deliberate shift toward wind and solar energy. This is unbelievable. To discourage further investment, the tax rate on oil and gas extraction profits has been hiked to 78%, Michael. I'll tell you what, that is stifling oil and gas investment. And the second order of effects, Norway is one of their biggest suppliers of electricity and natural gas, and they're wanting to shut the UK off. What is the UK going to do when Norway shuts them off next year? This is absolutely unbelievable. Coal has been phased out. The reliance on gas exposes the nation's global volatility as seen in the post-war. This is unbelievable. These two go hand in hand, skipping down the road of stupid.
Yeah, I mean, here's I think the interesting part here. So it's a tax rate on oil and gas profits at 78%. Now, me, the finance guy, says, well, okay, well, we're just going to do some sweet accounting tricks to make it look like we don't have any profits. You reinvest into R&D, you capitalize things at a higher rate. So I'll be hard pressed to see if anybody actually pays those rates. BP, I'm sure, has a great accounting firm or a great accounting staff that will be able to figure out how to weasel their way around this. I think what this does signify, and you wrote this in the article, is the fact that now all these oil and gas companies, this is probably going to be the nail in the coffin for them to eventually leave. We already know BP hired as their new chairman of the board, a new chairman who has experience moving companies to the New York Stock Exchange, which has resulted in an over a doubling of the valuation. Okay, so the chairman, Alfred Manifold, okay, the company CRH changed their listing from the London Stock Exchange, the LSE, to the New York Stock Exchange, and the market capitalization doubled. If there was ever a final, in my opinion, nail in the coffin to get this done, it's this. And candidly, I'm writing a little bit of I'm in the middle of finishing up a article for our Substack that'll drop later this week. This could be the final step before BP finally puts itself up for sale. And there could be an interesting buyer in the market here, which we will cover. It's currently extremely undervalued. I'll be shocked if Shell also doesn't consider this. I mean, it's the problem with central planning. You're always going to incentivize something leads to a negative effect somewhere else.
Exactly. I found these two stories quite entertaining to write this morning. Let's go to the next story, Michael. This one is absolutely a hoot. The Jones Act still has a stranglehold on energy dominance, and new shipbuilding rules could derail U.S. LNG exports. Michael, today there's only about 95 Jones Act compliant vessels in operation. They're expensive, they're old. Guess how many LNG carriers the United States has flagged under the Jones Act?
I don't even want to guess. I'm sure it's low.
One. And I think it holds a coffee cup full of LNG. It is small. It was built in the 80s. The U.S. exported a total of 101,396 LNG cargoes last year. At the same time, the global LNG vessel fleet has 792 operating tankers. Per data in the CLNG Trade Association, of these, only one is flagged a U.S. ship, but it's half the capacity of a modern LNG carrier and primarily use services delivering to Puerto Rico. Holy smokes, Batman. The shipbuilding requirements that are in the trade plans that the Trump administration has are very restrictive, and we need a minimum of 6 to 7 within the next 5 years. Now, it's being built in the United States, not just flagged. That is the key difference, Michael.
Well, and I also think that, we're just talking about energy. I mean, let's not even talk about the shipbuilding from a military and a defense standpoint. I mean, if you really think that China's this next great boogeyman and the monster, you think we're going to help defend Taiwan with aircraft carriers? Probably not. We're probably going to need something a little bit more dynamic, something that's a little bit more crazy. And so from that, let's throw that out of the window. Let's just talk about energy. I mean, California still purchases Middle Eastern oil. Why? We can't get our own U.S. oil to them because it requires one of these 95 ships. Don't even get us started about Hawaii. We all know how bad Hawaii is when it comes
Alaska.
to importing foreign fuels because of the Jones Act. So, I think this 6 is low. It does say it's at least 6. I would say that number needs to be at least in the 15 to 20.
Oh, I agree. And I think there is something that needs to be done in flagged versus built. And I think that should allow the United States to buy 50 tankers, 100 tankers, and get us started with buy us some buffer.
So I got a question for you, because to me, this seems like an easy bipartisan bill to get behind. What, in your opinion, is holding up Congress from moving on the Jones Act?
212 jobs by a union.
So it's 200, really, that's all it is?
That's all it is. It's a union that has a grip on a bunch of different politicians that have greased the skids in political graft and corruption.
Yeah. Is it the longshoremen? Is that what it is?
Probably, but I got to go dig my numbers out and all the papers and research. But it is basically 212 jobs, and that's it.
And this is where we have to be honest about capitalism. One of the first things that you learn in college, if you decide to study economics, which I happen to do, you learn about this idea of creative destructionism, that there are always periods of capitalism where old industries are destroyed and new industries pop up. And those jobs that were destroyed, you end up finding new jobs somewhere else. And I think there is a little bit more of a nuanced discussion, specifically when we talk about what's going on with AI. But if the Jones Act is really just supporting 212 jobs, that is truest form of regulation gone wrong.
It is 100% gone wrong. And it was built out of the 1920s to trying to help actually keep shipbuilding here. But all the regulatory processes, we're down to 4 shipyards that are basically supporting the military. We have about 2 or 3 others that are coming back online. The shipyard in Philly has been bought by South Korea, and that does count and is coming back online. So the Trump administration is making some headway, but they are not going to hit these self-imposed barriers that they've got going on here. And it is a gigantic problem for energy dominance because LNG growth is going to be handicapped dramatically in 2 years.
Yeah, no, absolutely. Absolutely. All right. What's next? Let's move to
Let's go to some uranium. New uranium plant in Kentucky is just the start. The landmark move for America's nuclear energy, General Matter, brand new uranium enrichment startup, has signed a long-term lease with the Department of Energy, the DOE, as we call it, Michael, to construct a $1.5 billion enrichment facility in Paddock, Kentucky. The project announced on August 5th at the site decommissioning. Paddock Genesis Diffusion Plant signals a revival of domestic nuclear fuel production and could herald the beginning of a broader nuclear renaissance in the United States. This is gigantically huge. And HALEU enriched between 5% and 19.75% uranium-235 is essential for next generation reactors in the smaller form modular reactors. The project will leverage scalable, cost competitive technology and reuse 7,600 cylinders of existing uranium hexafluoride stockpiled at the site, ensuring sufficient environmentally conscious operations. It's pretty huge, dude.
Yeah, it really is. It really is. I mean, you've had a bunch of different interviews now with good friends of the show, Nano Nuclear. You're deep into this stuff. The problem is we need. It's just like any supply chain. If the full supply chain is not in America, you are always going to be reliant on somebody else. And there are certain things where you need to make sure that your supply chain is here. Now, do we have enough uranium here to support this? That I don't know. Maybe we do, maybe we don't. But
we do.
So there you go.
And part of the problem is the Biden administration had one uranium mine in Arizona that they were about to approve, and then they got canned again. So we do have the mines. We don't have the processing, and this is processing. This is huge.
Nope, absolutely. So I mean, we're going to need to, as you say, have a nuclear revival. I do think this is it's an interesting time if you are a investor looking to get into the energy space from a nuclear standpoint, because really at this point, all that's holding nuclear back is regulations. It's all it is.
You bet. And I think that the nano nuclear folks are going to be some of the leaders. There's about 5 other nuclear companies that I'm looking at interviewing their CEOs as well, too. And also today, when this airs, I will have interviewed the CEO of Liberty Energy. So then Ron Gusick is going to be on for this next week. So that'll be kind of fun.
I will say this, though, this General Matter company that you're talking about, I mean, the people that are currently backing them, well, first you've got Peter Thiel, who, got some interesting spicy connections, and also In-Q-Tel. You know what In-Q-Tel is, Stu?
No.
It's the CIA's venture arm.
Oh, geez.
Hey, not saying anything. I'm just throwing that out as a fact. So might want to, yes, yay. We're all about this, but
yeah, the DOE has already got into some other mineral mining and everything else. So why wouldn't we want the CIA? And then holy cow, Batman.
Absolutely. So very interesting. What else you got, Stu?
That's it for me, man. Let's get rolling.
All right. Well, let's jump over here and cover what's going on in the oil and gas space, guys. But before we do that, let's quickly pay the bills. As always, thank you for checking us out here on the world's greatest website, energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know when it comes to be at the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit the description below for all links to the timestamps and to subscribe to our Substack, guys. It's truly the best way to support the show by subscribing to our Substack, the Energy News newsbeat.substack.com. We drop a great daily digest on what's going on in the oil and gas and energy business. We've had some tremendous feedback from all of our subscribers, so we thank you there. But please, guys, go ahead and give it a a subscribe over on Substack. It's one of the best ways to support the show. And if you feel so inclined to subscribe and pay for our premium Substack, which has a bunch of cool features only for paid subscribers, you can do that on a Substack as well. Also, guys, big shout out to probably one of our favorite companies in the midstream space, Reese Energy Consulting. You can check them out, reeseenergyconsulting.com. Guys, if you need help in the midstream space, whether you're an upstream company needing first purchaser or midstream contracts reviewed, whether you are in the midstream space and you just need a hand with some permitting stuff, you need a red team analysis done, anything that you need help with in the midstream space, guys, Reese Energy Consulting is our go-to. They have clients that range from two people in our garage all the way up to the largest publicly traded companies in the world. So guys, trust me, you are a fit for them. ReeseEnergyConsulting.com. Go ahead and check that out. We love everybody over there. And finally, guys, are you sick and tired of paying taxes? Because if you are, we have a great tax analysis that we've just added to our oil and gas portfolio survey. Go to investinoil.energynewsbeat.com to figure out, one, what your tax burden is and what it could be if you decided to allocate capital into the oil and gas space, guys. Again, that's investinoil.energynewsbeat.com. Take that tax survey, fill out a couple of other questions, and if you qualify, we will send you a bunch of information and possibly point you in the right direction, guys. That's investinoil.energynewsbeat.com. Top line indices, though, Stu, on Friday, S&P 500 up about 0.8 of a percentage point. NASDAQ up about a full percentage point. 2 and 10-year yields up about 1 and 0.8 of a percentage point, respectively. Dollar index climbs a little bit, up 0.2 of a percentage point. Bitcoin up at $118,000, or about 2 percentage points for the week. And crude oil actually finished the day flat after sort of, really rolling up and over all day. Brent oil was down about 0.8 of a percentage point. Natural gas dropped below $3 by about 2.5 percentage points, down to $2.99. XOP, which was our E&P securities contract, was up 0.3 of a percentage point, and OPE, which our oilfield services contract, was actually up 0.7 of a percentage point. I think there theoretically is, and Stu, I'm interested in your opinion, because really what held oil on Friday, everyone was waiting for this potential, what was going to happen with this Russia deal. Well, now all of a sudden, Putin and Trump are meeting in Alaska, which could be extremely interesting. Oil was still down 5% on the week off, sort of all of this potential tariff news. Nothing actually happened on Friday, even though that was sort of the quote unquote deadline. But I do find it fascinating. Stu, what do you think of this Trump-Putin meeting that's going to happen in Alaska?
I think the big boys are going to be in the room, because the corrupt Zelensky is now he's saying that the Bank of London and the France are telling him not to give up any land whatsoever. However, you take a look at the polls from the Ukrainian people and the parliament, he has no power to negotiate. It's actually the parliament of the Ukraine that needs to negotiate. And 70% of Ukrainians want to give up land in order to go ahead and do this. So Zelensky, please shut up, sit down, and put your head in the toilet. I'm sorry, I'm tired of him. His wife is driving a $15 million Bugatti. He has now bought a ski resort in France. The man has stolen tax dollars.
I'm very interested in checking out his ski resort. I've moved so many times here in Texas that I keep moving my snowboard from place to place. I'm like, when am I going to get to use this? So maybe I'll go hang out at the Zelensky resort.
Well, you and he are on the same height level.
And it is interesting. We did also see, I think, something interesting that we saw again this week was the 547,000 barrels per day that OPEC put back on the market. That sort of kind of started the week off. We did actually see rig counts, Stu, drop by 1. United States rig counts down to 539, which is, pretty substantial. Just when you look at over the long term, 1 week over week isn't terrible. We're down 50 from year over year. And last year we were down 60 year over year. So, you're talking in a 2-year span, we've basically dropped 100 rigs. You could theoretically say, well, productivity per well is going up. That, we could spend hours talking about productivity per foot drilled relative to all of this other stuff. We did see the frac count spread drop by 4. So, all in all, is a pretty bearish week for oil and gas. We also did see hedge funds and money managers had basically dropped what was remaining of their long crude futures and options positions in the week to end August 5th, which obviously, I mean, who wouldn't? The other things too is we had a lot of earnings drop. I mean, I'll just go down and read you the list of earnings we saw on Friday. We saw Granite Ridge drop their earnings, Mock Natural Resources with the midstream company. We saw EOG, Dorchester Minerals, Kimball Royalty Partners, ConocoPhillips, Landbridge Company, Bring Energy, Avital Energy, Riley Permian, Murphy Oil Corporation, Sandridge, Apache, Occidental, not really Occidental, yes, Occidental, and Talos. And that's all, Stu, on Friday. So we don't have time to go over all of them. But what I can tell you is that the market has reacted pretty positively to these earnings reports. Now,
Nice.
part of that has to do with, prices were, this was the quarter two was sort of the last time prices were sort of at this cyclical quote unquote high. So if you're wondering, oh, is it just because, are all these companies doing well? It's more got to do with the fact that they're posting profits that probably are beating expectations relative to what the street thought. But you have to remember what the price environment was. I do think companies were squeezing out, most of these companies are beating their midpoint guidance per well. And so really the question, and I think what analysts are thinking is, okay, is that because of well productivity going up? And you could make an argument for that. Is that for them just squeezing out the last dollar of profitable CapEx that they can before they begin to cut? Could be a little bit of that. It's probably a little bit of both. It's also now the time where companies are shifting towards their highest and most economic wells. I mean, let's just be honest. When prices are $100, you're not necessarily drilling your most economic acreage at $40 because you don't need to. You can save that in the reserve. I mean, there is this idea from a planning perspective that if you have wells that you can drill profitably at $40, it might economically make sense to save those and keep those in the inventory for when prices do drop and they become your only profitable locations, versus when things are at 80, 90, or even $75, you can get away with drilling some of your tier 1.5, tier 2 acreage. So I think there's also a little bit of that. It's going to be very interesting to see what happens, Stu, but it's going to be a pretty wild week. We are moving to 2 days a week. So guys, you're going to listen, as you listen to this on Monday, we will be back in the chair on Wednesday to cover everything that you need to know in the oil and gas business. But my favorite time of the week, Stu, what are you worried about this week?
Well, I'm concerned about the meeting with President Trump and President Putin on Friday. And I'm sitting here looking at Bloomberg as we speak, and the European leaders are asking to speak with President Trump before the meeting. And if President Trump really does go through and really try to put secondary sanctions on India and enforce those, I've got mixed emotions or mixed signals right now on whether or not they're enforceable, what the numbers are. There's still a lot of mixed stories out there. I think it's a huge mistake. So we're in a few days of a really an unknown at this particular moment. But I'm really looking forward to President Putin and President Trump speaking, and I'm going to be hopeful that the big boys can put the little boy in the high chair, because the Ukrainian parliament wants out and they're willing to give away land for the Russian speaking Ukrainians. And I think that would be a win-win for everybody to move on.
You heard it here from our Russian Ukrainian analyst, Stu. So we appreciate it. But with that, guys, we're going to let you get out of here, get back to work, start your week. Appreciate you checking us out here on the Energy News Beat. Stand up for Stuart Turley. I'm Michael Tanner. We'll see you Wednesday, folks.